Thanks for tuning in to another episode of Investor's Guide. I'm Avni Raja, and this is a show where we guide you and help you on how you can make your money work for you. Now, in today's episode, we are going to be speaking about mid-cap funds. We've been talking about the various categories of equity funds. We discussed large-cap funds on the last episode, and today it's time to talk about mid-cap funds. And joining me is Feroze Azeez of Anand Rathi Wealth Management. Feroze, thank you for joining us on Investor's Guide. Mid-cap funds is, of course, one of the most popular equity fund categories. It can give you that extra edge in terms of the kind of returns you get from your investments, but it also adds that extra bit of risk. So one has to probably be a little cautious and be aware about putting money into mid-cap funds. But let's start at the beginning. Help us understand how these mid-cap funds work.
Only the mid-cap funds are funds, as the name clearly indicates, invests in companies which are mid in size, and not the really large ones, not the really tiny ones, but mid-segment in terms of size. And that's been defined as the 101st to the 250th company which is listed in India as per size. So 100 to 250, 101 to 250 is the mid-cap segment. A fund manager is permitted to invest in this 150 stocks, or 2/3 of the money. 1/3 he still has the freedom to go beyond this 150 stocks. A fund which invests money in this fashion, 2/3, almost 2/3 in this 150 stocks, and the rest of it, 1/3 in the other stocks which are listed, is called a mid-cap fund. So mid-sized companies which could in the future become large companies are the actual target segment for investment from the fund manager on the behalf of an investor.
Okay, so then what is it that fund managers actually look for when they choose mid-cap companies? Because like we know that when it comes to mid-cap companies, it's also that has that extra bit of risk as well, and things may not go as planned. So how do fund managers sort of determine which ones make sense?
Avni, in a mid-cap fund, generally the fund manager adopts a bottom-up approach. Generally, bottom-up, by which I mean goes into the nitty-gritty of the business and has lesser affinity towards the sector they operate in, unlike in a large-cap fund. So what does a fund manager see in those stocks? He sees what is the return on capital the business is generating. One. Second, it sees how much free cash flow does the business throw up. Like any business has some extra money, profits generated which are free cash flow. Those are called free cash flows, which are free to be distributed to shareholders. So free cash flow, return on capital employed, management, business strength, longevity, reserves of in the balance sheet, all these are different nuances or decision criteria for the fund manager to narrow down from a 150 universe to those 40-50 stocks which he or she ends up buying to formulate the portfolio.
Right. And again, for mid-cap funds, when we talk about the kind of investment horizon, what should it really be? Also, just to point out here and perhaps reiterate, you could also reiterate for us that may not be a good idea to look at only the 1-year returns when you are choosing a mid-cap fund. You need to look at a longer time horizon.
Yes, Avni, I would like to recommend people to hold a mid-cap fund for a couple of years longer than a large-cap fund. I would say 5 years is the minimum period for a large-cap fund, or 4 to 5 years. For a mid-cap funds, I would say 6 to 8 years is the ideal time frame for mid-cap as a segment to fructify the return which you have been expecting. Anything shorter than that could be risky. Why would it be risky? Because mid-cap stocks, when the markets tend to fall, which is what the attribute of a market always is, these tend to fall little bit extra than the large cap funds. So mid-cap funds will require at least a 6-year time frame, 6 to 7 or larger the better, but a 6 to 7 kind of a time frame for a mid-cap fund is ideal.
Okay, and also if you can give us a sense of the kind of returns that one could see as far as mid-cap funds are concerned. Again, here a caveat being that one can't always go by past performance, because every sort of time period as far as the markets are concerned are very different, as we've seen as well. And how does this fit into one's portfolio?
Avni, if you look at the last 3 years, mid caps have not delivered as much return as a large cap fund has. But that's very contrary to the belief and the expectation of an investor. But to my mind, over the next 3 to 5 years, since the mid cap funds have not gone up as much as the large cap counterparts, the return expectation of a mid cap fund could be at least 3 to 4% more than the large cap universe. So I would say a 15% to 16% expectation over the next 6 years on a compounded basis is not ruled out, especially given where mid cap stocks are today. They have not risen as much as the large cap counterparts. So I would be ambitious, early optimistic to say at least a 3-4% more than the large cap, and hence a 15% compounded return on a 5-year basis is a practical expectation.
Okay, and also Feroze, this is also one important aspect in terms of the kind of cost one incurs, whether we talk about a large cap fund or a mid cap fund, any equity fund really. What is the kind of expense ratio one needs to take into account?
Avni, when we talk about expense ratios as per SEBI, who's the regulator, who's the watchdog for all of us as investors, reduces with the size of the fund. A smaller the fund, larger could be the expense. So if you're looking at prominent large funds, large sized funds, the expense ratio could range between 1.75 to 2% as the expense, and whatever returns one expects is post expense and before taxes. So I would say a 14 to 15% return post this expense is a certain is a high probability event for a 6-year investor.
All right, Feroze, we'll have to leave it there. Thank you so much for joining us with all of that perspective. Well, that's as far as mid-cap funds are concerned. Hope it's helped put things into perspective on how mid-cap funds can perhaps fit into your investment portfolio. On that note, thank you so much for watching, and we'll be back with another episode.